Greetings, Dr. Jeffrey Scott. This is my weekend market update for the weekend of Sunday, January 15th, 2023. My email address is hgsidoc@gmail.com, or you can comment in the YouTube box. I'm going to address a couple of those in a moment. I titled this weekend's program, Can the Bullish Momentum Break Resistance This Time? Go through the disclaimer in a couple slides before I want to comment about some of the comments I got last weekend. This is for educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use, and no one pays me anything to say good or bad things about their programs. Trading involves risk, and you alone are solely responsible for any investment decisions you make. Also wanted to remind folks that the Wealth 365 event is actually not 29 days away, but 2 days away. And I will be speaking on Monday the 16th, and my session is from 11 to noon, which is really an amazingly great time. Thanks to Rob Hoffman for giving me that set. And then again on the 21st from, I believe, 10 to 11 in the morning. So I hope to see some of you there. I'll have a chance to go in depth on my indicators that are in the package, both in the base package when you buy it, and then the scanner and a few other things that are available for purchase. Now, when I did the video last week, it was a long one, and I had some comments about that. Some of the comments made sense. One comment wanted me to separate out the different programs. That doesn't work for me. I do this for fun. I do this to support some of my friends. I've been doing this for 20 years. And I use the programs that I use. And I use wealth charts a lot. I use HGSI. I use some of the other programs that you see. And I try and tell the story of what I'm seeing in the market. I also know that because of the programs that I've done both live and online for the last 2 decades, people have bought several software programs that I've talked about. And I like to use those programs so they can see how I use them so they can get value. Now, I do a wealth charts only program, and for the comments about the length of the discussion, that one's perfect for you. It's at stocksanddocs.com. It gets posted before the market opens on Monday through Friday. I usually do the Monday one after I do the longer weekend one, but I don't control the posting. And those are supposed to be 5 or 6 minutes. They've gotten on the weekend to be closer to 10 to 12, but they're a very quick review, one program, and I call out some of the things that I like. What this isn't is a watch list service. I don't distribute my watch list. I don't always show my watch list. And for the folks that said they just want my watch list, I don't really do that. I don't have a paid service, and that's the kind of thing that I think you would provide at a paid service. I'll talk about some of the things that make sense to me and some of the things I'm looking at, but I'm not here to give out a watch list. And frankly, why would you want that? I'm a physician, not a broker, and I'm really talking about how I look at the markets and the things that make sense to me. They may or may not make sense to you. So stocksanddocs.com is the shorter version of these programs. So are we in a new bull? Now, that seems kind of a funny thing to say, but we're on the precipice of perhaps hitting a bull, especially in the diamond and the NYSE. As you could see, since October 13th, they're up close to 20%. Even the lagging NASDAQ and technology is up over about 10%. So we really are way off the bottom since that October date. And if we look at what happened this week, now this week was a 5-day week, so the 5 days would reflect the actual week. We can see that the Dow was the laggard of the major indices, up 2%. The NYSE 4.2, the Russell 5.3, the Spiders 2.7, and the NASDAQ and the Qs between 4.5 and 4.8. That is a massive week in the market. I'll also show you in a few minutes some bullish thrusts that, if you look historically, are related to some follow-on from this. Now, we are getting to a point where at least short-term we're overbought, and we'll talk about that some and how that might impact. Now, we had a lot of news this week. We had Powell talk about how painful it is sometimes to be the Fed and have to slow the economy. We saw a CPI, which I think on the product side was soft or good, but we still showed resilient inflation on the services side, yet the market ended up trading up on that day. And even the Fed had speakers and employment numbers later in the week did not derail a very strong week in the market. If we look at from the 52-week highs, we're still led to the downside by technology. When we look at the sectors, and if you look over here, you can see that every sector is off its lows by double digits. And if we look at the ones that are the best performers off their lows, energy continues to do well. And on the week, the only things that were down were staples and healthcare. Now, if this market is about to tank, wouldn't you expect some of the more defensive things like staples, healthcare? How about materials, which was up modestly on Friday, although it did have not had a good day on a good 5 days, which you'd expect if the market was going to be more risk on. But if the market's going to be risk off, you'd expect healthcare staples to do poorly, and they did. And utilities also underperformed. So, the defensive plays underperform, which says perhaps a good thing about where we're going with this market. Now, if I look at the market, I said we're short-term overbought. 26% of the stocks in the S&P 1500 are trading above their Bollinger Bands. It was higher on Thursday during the day, so perhaps we've eased off some of that. 89% of the stocks in the S&P 1500 are trading above their midline of their Bollinger Band. And if we look at any time frame from 1 day, 2 days, 5 days, 10 days, or a month rather, we can see the majority of these sectors, industry groups, and stocks have traded up. Now, what's underneath? In white, we can see the 10-year and the 30-year rates are down. It's no shocker that as these turned down, the S&P turned up. Breadth. Here's part of the overbought perspective. Stocks above the 200, stocks above the 40-day are all getting up to a level where we've seen reversals in the past. And then the 21-21, the 13-week new high, new low, which is a very sensitive short-term overbought, oversold. When we start to see numbers up at the top, you almost always see a reversal, and we are at the top here. So something to watch is, at least short term, are we going to pause to refresh, or are we going to pull back? But I think short term we're getting into that range. Now, another way of looking at breadth is using some of the Q tools, and this is in Metastock, and I do not show this often because I know many people do not have it. I think Sager's SuperiorProfit.co tools are awesome. And what I wanted to show you was, this is the 13-week new high, new low of the market itself, but whether I'm looking at the S&P 500, the NASDAQ 100, the Dow Jones, or the 1500, which would include small, medium, and large caps, we are overbought. And we can get more overbought, but when you get this overbought, you typically get at least a pause. Notice here this light blue line is small cap outperforming large caps. That's a change. If we look at much of the market pullback, it's been the opposite. And are we starting to see a glimmer of growth versus value? Wouldn't that be nice? Here's the buckets again, 89% above the midline, and you could see that most of the stocks in the S&P 1500 are either at above the Bollinger Bands or within 10% of their Bollinger Bands. So we are at a point, again, not to berate a point, where you might expect a pause or a small pullback. Doesn't have to be a resumption of the bear. Is there a recession coming? You've watched this before. I'm in that camp, whether I'm looking at credit spreads and seeing tightness comparable to 2018, which led to a fall in the market. And you can see the big tightness that occurred in 2020, which led to a recession, short recession. If we look at the 10 versus 2 yield inversion, we continue with almost record-setting duration of this inversion. And these inversions are typically, when they recover, is when you see recessions. You had more of a reversion of the 10 versus the 3 when you look at 2020. Now, one thing that's very optimistic is I've been commenting for the most of this 22, frankly, how we just saw no new highs and we predominantly saw new lows. Well, look at what's happened over the last couple of weeks. New lows have gone away, and we're starting to see green shoots of new highs. If you're looking for this market to actually recover and have any sustainability, those new highs have to be something to grasp onto. Now, this was another somewhat bizarre week when you look underneath the covers. The first thing is, again, we throw out the tail and the head because the number of stocks here by the gray line are very small. So we start looking about here to here. So we have pretty much everything above 5% return. That's a huge weekly return. A huge weekly return. It also almost looks like the lower quality, low ERG, remember ERG is EPS plus relative strength plus group rank, but lower quality stocks outperformed. And when you look here, earnings per share, no earnings did just as well as good earnings. Another week of poor relative strength stocks leading. Now, good relative strength were not negative, but you had stocks with no relative strength with a 15% return. And the prior week laggards led. So another junk off the bottom. But let's think about what's been the junk off the bottom. Small caps were lagging large caps. Large cap value was leading, so small cap growth was not working. So theoretically, a resurgence of small cap growth could give us this picture. Now, the group performance analysis is something I run in HDSI. It's based upon the data that was sitting in the market on January 6th. And then I look forward, what was the outcome based upon that data. And I'm just really looking at percent. And you notice that there's only one red line. So things that worked really well that were extended the week ending the 6th finished flat. The S&P was 2.69. My large buy watch lists were about the same performance. If we look at the holdings that I had going into the week, we're up 4.7. Now this is kind of bizarre. I always put together, I call it a short screen because I didn't want to short last week. There was strength in the market, but I picked stocks that look like they might be getting ready to roll over. And I put those in a candidates and then I see how they do. Well, they obviously did extremely well to the long side. Again, the beaten up stock the week before actually outperformed. What else performed well? Look at Mike Scott's Focus 3. These are a curated list of IBD high growth stocks. IBD 50 was up 6.2. The weekend review was 4.5. The Market Smith was 3.25. So this is a total reversion to mean of what we've been looking at for a long time, where small cap growth actually did really well and beat the S&P 500. Something else that beat the S&P 500 are the canaries, the Meta, the Amazon, the Google, the Netflix, the Apples, bookings, and the canaries were up 5.5%. So this was a different week, and it did show strength, and strength in places that frankly weren't working. Now, is this TrendLine ReTest different? This is something that was put on Twitter by Riverbend Investment Strategies. And it's just like we've drawn the top of the S&P back in January. Here we were on Friday. And notice that we've pierced it again, which is really the fifth time or fourth time. Four prior, this is the fifth time that we've broken through trendline resistance. And the reason why this one might be different is notice the green arrows that the MACD was rolling over each of the prior, but the MACD just gave us a fresh buy signal. So that's one thing that might be different. I mentioned the thrusts. Well, here we have NYSE bearish thrust signal, all clear. So this looked at a Dow Jones new highs to new lows of, advances to decliners rather, of 10 to 1, where the ratio of 1.9 to 1, and looked at the number of days when you had that thrust of advances versus decliners, and you could see going back to the 40s, you've only had a small number of these signals. We had one of these signals on Friday, and then it looked at what happened after you saw that. And what you see is that the number up versus number down years at 5 days, 10 days, strongly positive. And by the time you get out to 6 months to a year, almost all years are up. And when you look at the gains are strong. So this was felt by some to potentially be a signal that this market's different this time and that it's going to go higher. And if you look at where these arrows are, they were pretty good bottoms in the market. Now there was another thing, which is the breakaway momentum as described by Walter Deemer. And this is also a thrust, and it looks like a 10-day NYSE AD ratio of 2 to 1. Now, there's a lot of overlap here, but this is actually a tougher one, I think, to hit than the prior one. And what it basically shows is that if you look out 6 months, you're up 96% of the time. The one time you weren't up, you were flat with an average return of, or median return of 12.16. So one could expect, based upon these two thrust signals, a bit of a rally here. Know your news and earnings. We've got a couple Fed heads at the back end of this coming week. We got the Fed beige book and some jobless claims. I'd put that in the medium category. But what we really have is a lot of earnings. And what we saw with bank earnings, for example, and Delta on Friday, they opened up down a lot, but they then clawed their way back, and some even the banks into positive territory. So it'll be interesting to see how this earnings season goes. And as my quote says here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market in general continued the strong start. Talked about the gains, some bullish thrusts. January is typically strong as in the third year of the presidential cycle and after midterm elections. I've deployed more cash, but as we approach what's probably overbought and some resistance, I'll be watching closely to take profits. That said, it does feel like we are closer to the end of this sell-off than we are to the beginning. Talked about that in the past, and let's go ahead onto the charts. All right, let's jump into wealth charts. Let's start with the hot stocks. This is something that I like to look at just to give me a sense of what might be moving a lot. Doesn't mean it's the top of the list, but are the things that are showing movement. And I'm looking at ETFs of indices to get, or sectors, give me a sense of what's working. Notice they're mostly 6s and 7s. That's improvement over a few weeks ago. And no surprise, we've got China. Retail, that's interesting, showing strength, perhaps getting ready for the post-holiday earnings palooza. Gasoline, which is surprising, so refiners might be interesting. REITs, small caps, cloud computing, and the spider. Now, these had to have had a big move to make it onto this list. I'll look at the leaders when we get to my bull scanners, and some of these will be there, I am sure. One could look at, for example, in the combo buy watch list. This will take a few minutes to run because there's about 900 stocks in this week. But I could actually look for stocks that had a big move and try and find things that are really starting to show some bullish momentum. So we'll give this a second. Okay, so you could see here's a list of stocks, and here are a number of stocks that are above 800 and have the flames. Just take a look at some of these. We got Cody. Now you could see the challenge here is this thing has already run quite a bit. It's at 94% on its high jump bar. Ardilex, big moves, awesome performer. Now I'm a pullback buyer. I want to find this thing where it's over here and not when it's run away and has a high jump at 100%. But you could see you could also use this combo leaders tool to find things that on the stocks that have moved. And again, the higher the well score, the better the performance. On the indices, let this populate. You could see, and let's talk about the resistance and why my concern there. Didn't realize I did that. Okay. Let's draw my trend line. This is going back to January. Take this all the way down here. And we could probably play around with where we draw it. But the bottom line is the spiders are up against resistance. I showed you that in the chart from Twitter. It's also at the 200-day moving average. Now, the good news is here a break above this would be really bullish. And if you look at the high jump, we're not extended at 44%. The daily and the weekly bongo are positive. I could show you pretty much the exact same pattern as we look at the other indices as well. If I want to take the Qs, and not sure why it didn't repopulate, but I don't want to mess things up. I've got a lot of windows open. So I'm just going to open this up here and put this down here and say it's really a similar story where we're not quite at the trend line resistant, but that resistance is kind of what we're watching right now. The diamonds have broken out over their resistance, and they've been the leaders. And the other that appears to have broken out of their resistance, let's put that trend line on it as well, is the Russell. Now, I don't know if I wanted to pull that for the trend line or come back here. But either way, the Russell has broken out above its resistance as well. We can see the VIX is sold off and the dollar is weak. A weak dollar is good for the stock markets. If we go into commodities and we take a look at what we see, gold and silver, weak dollar, they're doing well. We've been talking about them a lot. Oil's also picked up some, and you can look at the USO here. Still down in its pattern between the 50 and the 200. And then the thing that's really down, look, we had numbers in natural gas of 34. And if you look at where gas is trading today, down at 11. So natural gas really has sold off hard, almost acting as if the war in Ukraine is over or we're going to have a really warm winter, which we're not necessarily having a warm winter in the U.S. If we look at the 10-year, we know from the prior charts that it's come down significantly on the weekly. It actually bounced a little bit on Friday, but at 3.511, like the dollar, is probably supporting this rally. On my weekly timing system, if you want to see evidence of bullishness, the spider is now turned bull. the Russell, and the Dow. And considering the other three are bulls, we're so close on the Qs that I'm going to go 4 for 4 and say my timing signal um, has gone into a buy. I'll feel better when we get above the 30 WMA on the Qs. If I look at the market theme, maybe we're seeing a change here. Here is large caps versus small caps. So if you just go down to the hourly, you could see that we're heading down towards where small caps do better. So what had been a large cap story is now showing some strength in small caps. And when you look at growth versus value and you go down to the shorter time frames, when it's falling, it's favoring value. We're not falling anymore and we're trending up. So is this a story where small cap growth is coming in? If I look at my S&P sectors, again, big changes here. If this market was in trouble, would staples, utilities, and healthcare have sold off? I don't think so. I think the resurgence here of both discretionary and technology are very bullish for the short-term market. Yes, we have a pause to refresh coming. Yes, we're short-term overbought. But I see things here that I like. Materials remain strong. The weak dollar helps that. Communications like technology and like discretionary have had a nice comeback. And then I guess financials and industrials are hanging on as well. So clearly have to be in the bullish camp for this weekend. If I do the heat map, you could see Tesla, which announced these major price cuts. All things considered, it held up well. Tesla, just pull it up here, take a look at it. And let's go to a 5-minute chart. And let's see if we can make this usable here. Let me do this, go to the end. You could see that Tesla had a gap down at the open when they announced their massive price cuts. And I would say, considering that gap down at the open, they had a very remarkable day and got back close to even. That's what you see when there's strength in the market. JP Morgan had pre-market, did not look great. And you could see here a gap down at the open on earnings and closed up on the day. That is a bullish undercurrent. That's what I expect to see in a good market, not a bear market. You could see on the daily performance on Friday, only thing that was negative was utilities. On the week, at least using these sectors, everything's positive. Remember, this is not the 500 stocks in the S&P 500. It's not the 1,500 in the sectors from the S&P 1,500. But rather what you have is a very large data set. Now, for bottom fishing and top-down analysis, that data set's awesome. And you could certainly come in here and you could filter, which I like to do for greater than, let's say, $3 here. And actually, that's percent change. You can filter for algos and different things. I'll show you how you can filter for price and volume when I get to some of the scanners. But you can get a sense, and if you want to do a top-down analysis, just by looking perhaps here at algo score, basic materials, cyclical, which would be discretionary, energy, communications. Then you could look at what are the best ones from these groups. Go down from here to say here, hit compare, get a list of stocks. Let's rank them by daily algo. Hit the first one. And so what I have here is a list of stocks that have strong wealth signal scores from the top groups. Now I can make sure my watch list is set as weekend review, which it is, and I can just add those to my watch list. So I picked the top industry groups, the top sectors, and the top stocks in those groups. Now I go over here to Wealth Scanner. I look at the top-down indices, and let's see where the strength was. Well, we've talked about communications, and this does not, it's a 5-minute chart. Here's the daily chart. You can see the nice breakout on SOCL. Is it getting extended? It is by high jump, but it's now above the 200, and I would expect the 17 and 50 to close. This is an inverted pattern, meaning the 200's at the top. If I'm extended to the upside, typically I'm up the 1750 and 200. So I'm not going to worry too much about that high jump. So SOCL, social, XBI, biotech had kind of a fresh breakout on Friday, Thursday and Friday on big volume. Gold miners, no surprise. And then we have Euro stocks, gold, home builders. Okay. I can go into my CAT scanner, and since we said that biotech was strong, we also said that social. Let's look at social first. So I've made a lot of lists of the different types of ETFs. So this is the social media ETF components. And so I'm looking for, I don't think I have many filters on here except for price, and you've got to be bullish. So YY, which is, I thought, more of a retail, but you could see a really nice pattern, a stair step, broke up above the moving averages. You had a cross of the 50 over the 200. So now you've got the 17 above the 50, above the 200, big volume, a little bit of a flag and a breakout on Friday with breakout, momentum, and volume, and relative strength turning up. This one looks interesting. Like so many stocks in this market, we're going to say the same thing, which is it's got a lot of overhead supply looking to the left on the weekly. Baidu, another, this is a Chinese stock like Baba and YY and others, and Hello, which is Momo, has had another big run. So these things have had their run. They've got lots of overhead supply. And obviously the big one in the SOCL, META, Meta, which has had a really phenomenal run off of its bottom. Didn't make the list because it didn't have any dots on Friday, kind of a sideways day. But you notice how its relative strength has really not gone negative to the S&P 500 since this breakout day over here with the big gap up. So that's been leading that group. I mentioned biotech was strong. Let's see if anything with biotech has some fresh signals that we might want to look at. Novavax, probably not my favorite in the space, um, but based upon the pure signals, again, overhead supply galore, 3 dots, so volume, breakout momentum from a squeeze, not extended by high jump, a little bit of a move on the volume, on the relative strength versus spider and the OBV. Not my favorite. Prevention Bio, it's about a $10 stock. That one looks a little bit more interesting. Gap up, run up, pull back, and now it looks like it wants to run again. 3 dots, relative strength turning up. The next one is Sarepta, also with a big move on Friday with 3 dots. So what happens is this scan is ranking stocks by momentum. So I'm not going to pick things or find things that are good stocks that are going sideways. I am selectively looking for stocks that are showing me one of my movement indicators, whether it's high volume, whether it's momentum, whether it's a breakout or a big gap up. Now, we can look from a higher level. Let's just look at that combo list. And we can look from a larger list of strong stocks to see if anything there is showing us. So that's my combo leaders list. And I'm going to filter this one a little bit. And what I'm going to do is I'm going to require not only my price and volume and having at least one bullish dot, I would like for you in less than or equal 9 bars to have had a short-term reversal. Meaning I want you to be heading up with a daily bongo that's bullish, but I wanted it to have been bearish within the last 2 weeks. So I'm looking for things that might be more fresh movers and not things that are extended. Now let's just take a look. China data, Chin data. Don't know much about this stock. It's an inexpensive stock, but it came up on one of my visual reviews of a lot of stocks. And you got to kind of like it here. It broke out after a sideways move, so kind of a cup handle and a breakout, although that's a pretty wide handle, on good volume. Volume, breakout, momentum, OBV, and relative strength turning up. Checkpoint software. I'd probably let it get above the 50 before I get interested. Here's that Prevention Bio. Here's an old name that looks like it might be getting ready to run, and that's Shopify. Again, broken record time, lots of overhead supply. This stock used to be close to $200 in the not too far away past. And in fact, this is after a big split. But you could see a big move on Friday with volume, breakout, momentum, relative strength, and OBV looked good and took out 200. It's now above its moving averages. Silver, sideways move, a little bit of digestion and ready to break out there as well. So there's a lot of good looking stocks. Cure is one that piqued my interest. Again, this is a biotech stock, and biotech broke out on Thursday and Friday, and you could see it took out its moving averages. This is a gene therapy stock that just had a recent approval, probably a little bit of ways from being profitability. OKTA, again, I'd rather buy things breaking out. This is still sideways below the 200. But if you look at what happened on Friday, it took out at 17. It had a momentum and a breakout, switched its bongo, and both its relative strength and OBV turned up as well. So I'm going to show you some of the stocks that I'll be watching. Many of those are ones I've already mentioned. There are a lot of good setups in this market. I think the big question is, how much of a pause are we going to get, or are we going to get more than that? If it's different this time, which is probably the most dangerous words one can talk about, but if it's different this time and we can hold above trendline resistance, then a pause to refresh could be very healthy, and then we see the next leg up. I think we've got to be very careful because we failed so many times that you have to have your plan at least ready in case this market sells off. These were some of the stocks that I looked at. A lot of them: Checkpoint, Prevention Bio, Shopify, Silver, Sarepta. We've talked about Wendy's. What an interesting pattern. Sell off, open up, gap down, closed high, 3 bars, dots, big volume coming out of a squeeze. I just love that. I think it's called a belt hold pattern. And look about it. It's a bullish engulfing pattern, taking it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Really going all the way back, frankly, to before Christmas. That is a bullish candle if I ever saw one. Smart Sheet was another one that looked interesting. And again, this is what I like when it's now broken out above its moving averages. One of the leaders has been Celsius Holdings. This is one that broke out above, if you want to call that a flag after this run up, a breakout here, improvement in relative strength in OBV, Celsius Holdings. Array is one of the solar stocks. They've been volatile. This one had a strong day on Friday. The solar stock that I've been playing is First Solar. So there's some things to the long side. I think the market, which is a basket of stocks, the basket of stocks looks really interesting here. I am a little bit concerned that we're running into resistance, and at the same time we've got some evidence of being overbought. So let's hope that this market can hold and then go higher if you're bullish. And we'll see you next week. And I hope to see some of you at the Well 365 event on Monday.